directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. Welcome back. Happy Tuesday. Thanks, Alan, for passing that over. And apologies for, I think, last week with my flub of your name when I got off the call with a coworker, Alex. So, Alan, won't happen again, as I said last week. All right. S&P is up a little bit today. I've got some trades running at SPX. I'm looking at the SPY this morning. We've got some gamma levels at 525. We have some 529s. We have a gap fill from yesterday around 526 and change. I'm going to look and see. I was looking at a call option on SPY. So let's go SPY. I might look at a butterfly spread here in just a second. So 0 DTE. This is back up to about where we started. Let me see if I can put a butterfly spread on this. And it's going to be close. I'm only $1.90 out of the money. I don't know if this is going to turn into like a monster winner. I don't know if it will, but let me do a quick butterfly call spread. And if I pin that at 525, so the question is, can I turn this into a, from a 30-cent debit to maybe a 50, 60-cent winner? If we get there, and I'd like to go a little bit further out of the money. It's probably just better off just to frickin' do a call option. It's just a little bit more pricey to do a call option. So what am I going to get here? This is a 35 delta. I'm looking for about $1.70 move. So $1.70 times 35. So about 60 cents on the dollar. I mean, that's not a bad return. Is that worth it? I'm gonna wait. I think we get there today. Let me see what this spread looks like. If I go butterfly, pin at 25, equidistant probably for $2. So that's a bit pricier versus an inexpensive one that I might be able to double. So let me go 2 contracts here, see if I can turn 30 cents into 60 cents, maybe double this trade. Try to grab a couple of bucks when we hit 525 today. I do have some time. Let's see if I can get this thing for 30. Try 32 cents. So I'm going to take a trade right now. 34, 30. I mean, this is above the ask price, dude. $33 debit or 33-cent debit. 35-cent debit. All right, filled with 35 cents. So if you want to take this trade with me, here's the deal. I sold the 525 call with 2 contracts, and I'm going equidistant $2 wide, so a 523 and a 527. So the way this trade looks is, I'll just type this out on the screen. So this is, and I'll put this in Pulver alerts, but I'm trading it live. So here's the deal. It's a SPY 4/22 expiration, sell 2 at 525. I guess it's sell 2 calls. Sell 2 calls at 525, and then buy 1 call at 523, and buy 1 call at 527. So that was a 35-cent debit. Ideally, I'm looking for SPY to hit 525 today and see what this trade is offering. Okay, I should see a 35-cent debit offering, maybe a 50 to 60 cents credit, and I'll look to protect. All right. So it doesn't have to be anything super fancy. Give it the day. I think 525 is a gap fill from yesterday on the SPY, as well as a decent liquidity level and gamma level that I'm watching for the morning. So, and if I lose, it's 35 cents, I'll take the small loss. But these trades have the ability to pay, upwards of 5 to 1, 6 to 1, even sometimes up to 10 to 1. Um, it's not too bad for a zero DT. Okay, so we'll see. I'll give that one some time. Otherwise, I've got some SPX trades that are running this morning, and they should be looking a little bit better. So this is my SPY. It's going to be a butterfly there. And then my SPX trades this morning, about just under break even. So they're a little bit higher on the call side. We're at 5247 with an 80 and 85 call side that I'm going to keep an eye on. So a little bit of red goes a long ways as far as recentering the SPX. So SPX right here, recentering would be helpful for my little SPX trade this morning. So hopefully a little sideways, hopefully a little red will help, and I'll get a couple of profits on the SPX trade this morning. P&L wise on the day, pretty good day to start, up about 40K, right in that kind of break even point. Like, I mean, break even for the year, I'm willing to accept that a lot of it is still like fluctuations and option prices. Big news today after market, we have Tesla earnings. That'll be an interesting result, whether it's, I mean, I hope it's good. I hope Tesla's great, but I'm prepared for some downside in case it doesn't deliver. I looked at an earnings summary this morning. It's pretty mixed. We saw a lot of companies this morning that like missed in revenue, but stock was up a little bit. It's kind of hit and miss. Didn't see any major jumpers. A couple of them that printed yesterday. I want to say, was it Calix? That was up like 13%. CALX was the ticker there. Today, before the market opened, Verizon was down slightly. Netflix actually is back up and retested some highs. So I'm keeping an eye on Netflix out for this week and next week. So let's go to the charts. Netflix is at 1051. I'm looking for a little profit here. I took the trade for about a $3.20 debit. I'm looking to try to get $1 out of that or better. Max out at $5 by next Friday. So if we hit all-time highs on Netflix, I'll probably end up taking some profit. Okay, let's do some top bottom here. Everything's up. S&P up 1.65%. SPY's up a little bit higher. MAG's looking a little bit better for now, but there's still, MAG's is going to have all the earnings print between this week and next week. Pretty sure all the major ones outside of NVIDIA. NVIDIA is like late May. But your Apple, like Google is this week. Tesla's today after market. Google is on Thursday. Next week, I believe you have Microsoft, Meta, and I mean Netflix was last week. So your big stocks, kind of your hallmark names are printing earnings this week, next week as we heat up. So earnings season is underway. Let's keep an eye out here. So about 1.6% on the S&P. Nasdaq up a little bit better, 1.9, 1.93 on the Qs. Dow's up 1.75. Russell up 1.2. Sold some calls yesterday in IWM at 200 for like, I think it's $5, $5 or $6 on a covered call. Just looking to repair to see if we get back to $200 by May. VIX is down slightly. Let's take a look at the VIX. VIX retreating is probably a good sign. Bond volatility is back up. This is not a good sign. This is, bond market option volatility. We're back up. The 10-year yield has not gone lower. SVXY. I did buy some shares. I dumped this thing for about $1.30 per share. So we had a little bit of a rally. I bought it around 35, 35.50. I've dumped it for about $37. So I didn't want to hang on to this one. I'm still waiting to see. I don't know. I don't know. Maybe there's more volatility ahead. Maybe this thing is easier to trade at the same price, maybe lower. But I'm just not looking to get crazy aggressive in case we have another vol spike. If we have another vol spike, this thing goes lower, right? So I'll probably take some dips. If a little more confident we can revert on volatility, then I'll buy some more SVXY. Dollar index, currency strength wise, we have today the Japanese yen was strong and then back down. The dollar's coming back a little bit. Swiss is weaker. Kind of happy to see that, but the vertical axis is lower. So not a ton of movement as far as Swiss franc weakness. Watching gold, of course, gold hit $3,500 an ounce, I believe, this morning, and it's faded slightly. Dollar is watching lows, right? Like, keep an eye on your lows. I think the dollar is still an active sell as long as we see this support act as resistance, or as long as you're watching a lower time frame. Look for pullbacks. You know, I talked about a bottoming formation. If you're, anything short the dollar, so your Aussie dollar long, euro dollar long, pound dollar long, New Zealand dollar long, dollar CAD short, dollar Swiss short, the dollar index has moved enough. The dollar index, by the way, is off to one of the worst starts since 1995. 30 years of dollar price action. This is as bad as it's been in 30 years. So pretty crazy. Um, but if you're trading FX and you've got some dollar profits, move those stop losses, because I do think we are due for a correction. There's still some symmetry down here, so any pullback could still continue to symmetry. But at this level, I wouldn't be surprised if we end up making a decent pullback towards support to become resistance. And then we see if this is a bigger, more permanent trend on the dollar, then at the 100 to 101 zone, we look to see if that resistance holds and we can resell the dollar again. Okay, oil at 63.24 off of the April 9th low. It's fine. I don't really have a good direction on oil. I talked about this yesterday. If oil comes back down to revisit the lows, I'm probably going to look near-term long on oil. Gold, pretty nice wick to the north. As far as there could be some profit taking. Pulled some data out yesterday. Gold seeing record inflows, and we essentially have a housing bubble in the U.S. Global ETFs performing well that are non-U.S. So, I mean, most of the Eurozone, this is money leaving the U.S. and repatriating back home and seeing, local ETFs do a lot better, or local, country performance doing a lot better. Eurozone EZU at 13%. So that's actually a good one. This would be a global ETF scan. So most of Europe doing pretty well still after a big shakeout. Emerging markets. I mean, this is kind of wild. It's like emerging markets are performing better than the U.S. right now. Yikes. So we'll see. I mean, time will tell. But just more frustration out of the U.S. The noise. It's like, I think Trump called out our Jerome Powell and called him a loser yesterday. It's like, cool, good, good etiquette, I suppose. Look, I don't think just trying to bully the Fed into cutting rates is going to do anybody any favors. I think that the victory lap of the U.S. is way too premature. Saying that we've got this, this trade war stuff is working, everything's down, there's no inflation. It's like, that's total BS. The yields are up higher than Liberation Day. There is no evidence that suggests that if the Fed is going to cut rates and be forced to cut rates, that it doesn't respond the same way that it did last September. That is my biggest concern. If anything, I would say the Fed shouldn't do anything right now. And naturally, this is a noisy event in the market. All right. If we do anything reactive, I think the bond market sniffs it out, and I think we go higher. And that is the exact opposite scenario. So how would Trump backpedal that? I mean, blame the Fed, most likely. It's like, well, they cut rates. They were too late. They were too late. No. Like, if they don't do anything, there's a chance that this can just settle down. Is there a chance that rates can settle back down? I would hope so. Is there a chance that yields could lower a little bit and actually see bonds go up slightly? Maybe. I mean, TLT is still in red, hitting back to lows. We're sitting in like a 4-year nasty drawdown in bonds. Maybe if we're lucky in the TLT side, it holds this area of support, but you just don't know if it's going to be the trade-off where this offers safe haven cushioning if the stock market is dropping. I think, within reason, we actually have some signs of the market finding some lows, whether those lows are, revisiting the April 7th low, or we have a little wave structure like I talked about yesterday, which was swing up from the 7th to 9th. That created a big swing, and then we pull back. We faded at the high. We pull back again. We tested that low yesterday. I could see this move happening. So if this is the start of the markets coming back up to retest highs, that wouldn't surprise me. Am I getting crazy bullish right now? No, not even close. Um, I've posted some videos on my channels and sent out some updates where, look, I'll get a little bit more bullish if we revisit lows. I will start reestablishing hedges up here as a just in case if we start revisiting this cluster right when all this thing started on this first breaking point. And I'd be pleasantly surprised if the market finds a way to break through, 57, 5,800 and get back to all-time highs. This would be like the surprise. This would be the expectation, and this would be the I've got to be braced for the downside. It's like I've got to be ready for anything, and I think all of us do. Um, None of this is going to feel easy. This is some of the most confusing commentary narrative every single day. It's like we're seeing gaps intraday or gaps like every other day is like a half to 1 to 2% gap, and then you kind of deal with the intraday price action. Sometimes it's aggressive, like yesterday's intraday price action was pretty aggressive. Today's intraday price action so far is pretty quiet. Pretty quiet here, pretty aggressive. Just it's every day is a new day, so it's kind of wild. All right, let's go gold and silver. So gold, little bit of a rejection candle. Doesn't necessarily mean anything. This could still offer up a nice little buy on the dip. I mean, look, this is a daily time frame. I'd love to see some type of pullback on a daily time frame that actually matters. My question is, I've been talking about this a lot. Obviously, I'm expecting like a bigger pullback. Okay, but even a pullback to the 21 period might offer another dip to take this up into capitulation type highs. Um, I'm not sure. I was curious if the dollar had to pivot really hard in order for gold to pivot, but that may not be the requirement. So I don't see gold at 34, 36 and think I'm going to buy it right here. If I'm going to buy gold, okay, if I'm buying gold here, then I have to be prepared for that being level 1, that being level 2, that being level 3, and that being level 4. Like if I'm going to allocate whatever it is, if I'm going to put $10,000 into gold, it's going to be 2,500 here, 2,500, 2,500, 2,500. That's how I'd invest it. I wouldn't put everything at the top. Although it may get there, it may not. But I need to be ready for if we have a correction, I want to be scooping up that correction and then still maintaining a longer outlook on gold. Okay. Silver. Silver actually green on the day, up 0.85%, and gold is 0.35. This is another chart to keep a close eye on, XAU versus XAG. If this retreats a little bit, then we might see silver, kind of slightly get the upper hand in relative performance, which is why I'm long both of them. So it's still a good trade on either direction. I just think that gold is a little bit overextended. Silver might be a really good catch-up trade if that's the case. Hopefully it is. Bitcoin. Hey now. Hey now, Bitcoin. Breaking some recent highs. And, well, looks like we have some confirmation. Follow the price action. We are on the right-hand side of the trend line where there is some decent structure right here. Therefore, if we are breaking, if we have a flag pattern, that's one way to continue on with a Bitcoin trade. Or if we break the trend line, come back and retest the backside of the trend line, another opportunity to get long here, or we revisit lows on the right-hand side of the trend line. One of my favorite trades. If you see some good technical confirmation, is any type of pullback, buy and then be prepared for a area 1, area 2. But the nice thing about being on the right-hand side of the trend line is it gives the bulls some permission to say, hey, everything lines up, everything's confirmed. It's not the guess of the lows, it's not the anticipation of lows. This is looking pretty darn good. So yeah, I mean, a nice little move above 90,000, taking out these recent highs from March. Those highs are around 88.5. So, is it pullback first, or is it just drifting? Are we going to revisit, 108, 109? Time will tell, but this does look pretty good. Pretty good. Give me 1 second. All right. Somebody at the door. Okay, so Bitcoin's looking good. I still like gold on dips, just not excited about buying the highs. I love silver. I think that silver getting back to these recent highs would be pretty encouraging. I still have a measure move on silver towards 35.88, and I'm longer term on silver going into the 40s. So quick spot check on everything. CEF. Do a little bit of everything here. CEF is up around 4,700 bucks. GLD up around 24K. PHYS up around 4,700 bucks. SLV up around 9,800 bucks. So still going to ride them out. I think there's a lot of upside potential on silver, and I think there's still, bubble-licious type price action on gold. And I still want to buy dips on gold. I just want to see recent dips. And if I was going to allocate again, here's what I'll do. I'll say that I don't mind for my portfolio allocating like another 1 to 2% to gold. Okay, I don't think it's a bad play. It's been one of the few shining stars of this year's asset class performance, outside of being like totally non-US and trading basically like individual European countries for a little 15 to 20% bump. Not the play I really thought about this year outside of getting some non-US exposure, but 1 to 2% gold. If I were to allocate that, I would space it out over this entire area. So I'm just going to be pretty tactical with the allocation. I don't know if gold makes this correction, or it just breaks, pauses, and it just stays relentlessly bullish. But if silver can outperform in any capacity, then I'll still be happy with silver. But I think the journey is not done. And then Bitcoin turning up, looking pretty encouraging. Again, I can kind of add to the mix here, but I have trades. So BITO is down, but still collecting like ridiculous dividends there. It's not great. It's just dividends with a slightly lowering price. And then IBIT is doing pretty well. IBIT is up around 35K. So between Bitcoin, gold, and silver, I mean, I'm probably riding close to $100,000 in profit right now, and let it grow. There's plenty of upside for Bitcoin to hit recent highs. If Bitcoin does get back to these highs, that should put IBIT, which I had a collar trade out to March. I think I added in another one out to May. I'm putting it up here at the highs. So I don't really want to let this get called away. I'm going to roll it if I can. If it gets called away, so be it. But all in all, like, those so far are some pretty good diversifiers. Okay, MicroStrategy. This would be another one that would be a lovely trade to get called away. I've got about 300 shares of MicroStrategy and a collar trade where it's covered at 310. I don't want to get super greedy here. This is only out another maybe 2-3 weeks. But if it stays above 310, I get it called away. I could look at it right now, and I mean, I keep going back to this like market seasonality. I do think like Bitcoin's looking pretty promising price wise. MicroStrategy follows that to a leverage degree, that perhaps a little income trade. And this is one way to look at it. So if I take my MSTR, there are my shares. There's my covered call, and there's my put. So I have a collar trade on here. Let me just label that. So collar. Right. So I was protected the downside in case things got worse. So I went out to June. Okay. I went out to June. And I think my break even is, let me check this one. I think I've lowered my break even to like 250. MSTR. 254.97. 254.97. Minus 310. There. So if I get MicroStrategy called away, I'm making about $16,500 on that trade. Not bad. So I could roll it, but right now I'm already out to June. I don't want to go too much past that, in all honesty. I mean, this waiting game for tariffs is out to the first part of July. So I think July 4th to July 9th is going to be the 90-day window. I think anything after that is a little bit riskier. Unless we have some resolution on the tariff side, July could be a pretty tricky month. August, September seasonality, you typically see some pullbacks. The September effect is a very real thing coming out of summer trading. And then, of course, everyone's wondering how Q4 is going to be from October to December. But if it gets called away, it's been a pretty nice repair. But anyway, I'll take the runs on IBIT. If just get out of MicroStrategy, that's fine. If I watch IBIT revisit some highs, I'm not going to complain about that at all. Copper still looking pretty good. This trade expires in 2 days. That should be worth about $1,600. Japanese yen still making some fresh highs. Nikkei behaving okay. I mean, year to date, I'm sure. Let me see what the Nikkei is year to date. So for the year, Nikkei pretty volatile. It is down about 14.4%. If we go to the SPX, year to date might be back into single digits. We're down about 10.87, so just under 11% for the year. So S&P still down double digits for the year. With our wicks, I mean, a lot of indecision, obviously, but I think 21% was about the high to low. High to low, about 21%. But Nikkei, there. Go back to the daily chart. Okay. So pretty strong support from the August 5th. Is that August 5th from last year? Yeah, August 5th bottom. Netflix crossing all-time highs. Okay, good. Let me check on a position here. Netflix is up a little bit of profit. I'm trying to go after, see if I can sneak in $50 out of this thing. So replace 3.7. $5. What would that winner be? That'd be $50. So 15% winner. Let's go a little bit higher. Try to get $1 out of that. So it'd be a 31% return if I grab $1 credit. Okay, Netflix is hitting all-time highs. One of the few bright spots in the markets right now. SPY, just let me take a quick peek at the SPY. If we're pushing up towards 525, I'm going to check that butterfly spread. That was a trade that I took this morning. So nothing crazy. It's up anywhere between 3 to 15%. So I'll just keep an eye on that one. If we hit 525, this hopefully is going to offer up a maybe 50 to 60+% winner. I'd obviously like to double it. That's what I try to go after butterflies. If I can turn a 1-to-1 or better, that's typically pretty good. So keep an eye on that intraday. All right, take this back to the SPX. Watch my levels. Netflix there. Let's go back into Japanese yen. Okay, so EWJ heading higher. I'm up about $4 a share right now in EWJ. So I just had $2 cost average levels. EWJ, the accounts that have 46 shares, those are up about $200. I might just end up, I don't know, I might take some profit here. This one excludes about the bottom 15% of the Nikkei. So if this goes back up to the recent highs, I might just say good enough. And that would be up another, what, $2, $2.30. I don't know. I might be up a total of like $1,500, $2,000. I might just take the profit. So if it's a return, I'll take it, but without having to sit and hold and, hope that it goes crazy high. It's like this could be a big range for a while. DXJ didn't trade that one. DAX looking for a cup and handle. So even a pause here or pullback, look for a cup and handle on DAX. FEZ, same thing. I sold some premium in FEZ. The FTSE, I like this a little bit less. I keep saying this, but it's like I still like FEZ DAX better. But take a screenshot of this if you want to. These are some ETFs that would be interesting to track this year. Primarily, Eurozone. So what I'm curious on is I'm going to do some exploring on this EZU. If I invest in EZU, does this actually get the benefit of all these other countries as a whole? Like if this ETF gets some exposure into all these other countries, I'm just not looking to like, hey, let's chase Poland it's already up 35%. I'm not going to chase that. These ETFs, like who knows what they can do. If you came into the end of 2024 into 2025 trading year, you possibly saw the stat that the US has outperformed the world by about 3 standard deviations over like the last 16 years. It was like the biggest on record. So it's not a huge surprise that the US is down and the Eurozone is up, and it's closing that performance gap. So is this a permanent rotation? I don't know. I think it's a good diversifier trade this year until the US gets its crap together, and and then we'll figure out if the US is resilient enough to still make all-time highs. But anyway, it's been an interesting rotation. I know you might see some videos out there that are really exploring this, and like they're all in on Eurozone. And look, the Eurozone doesn't do anything good until the U.S. is probably showing some resiliency. We saw that kind of systemic risk a couple weeks ago. So I think the U.S. has to be resilient and has to still perform pseudo well for a lot of these other flows to maintain their performance that they've had so far in 2025. Okay. All right. So Argentina, one poke of the 200 moving average and it's back up. I missed the opportunity to go long there. China looking better. I'm looking for a cup and handle. Similar thing. It's like big flash to the downside. If this is a flush to a nice support level, coming up here for a little bit of a pause or pullback, I think we can reestablish some longs. This run, in my opinion, has to be with the U.S. going up. If U.S. goes up, I think China returns, Euro returns, like everything looks okay. But if the U.S. is still struggling, I don't see these other countries, these emerging markets, these non-U.S. related assets going up without having the U.S. at least showing some stability. EWZ, this is emerging market stuff. This actually, if we're talking true emerging markets, Brazil, Latin America could be one of the better value plays of 2025. It's got a long ways to go, but if these lows hold and we get into a buy zone, there's a chance for this thing to, potentially double. So, looking at that list of mostly European stocks, but it's like the Latin America, Brazil space is plenty of upside potential. I think there's a lot of asymmetry there if we can get into a buy zone. Cedric says, how old are you? 42. I'm glad it looks like I'm in my 30s, but I'm 42. I'm an old man. All right, ILF Latin America, MAGs, Tesla and MAGs, other MAG 7 stocks reporting earnings this week and next week. This week we have Tesla, we have Google. Next week, I believe we have Apple. Most of these stocks are reporting earnings next week. Apple is going to be Thursday the 1st. That's next Thursday. Also, Amazon is going to be the same day, so it'll be probably Thursday after market. Broadcom, I think they already reported earnings. Broadcom was back in March. Google is this week on Thursday. Meta should be next week as well, next Wednesday, the 30th. Microsoft should be next week as well, the 30th. Yep. So we've got Microsoft, Meta, Amazon, Apple all reporting next week. Netflix was last week, but it's carrying into today, possibly poking all-time highs, which is kind of nice. NVIDIA earnings are out a little bit further into late May. Tesla is today after market. So, um, I mean, it's not like all earnings rely around Mag 7, but I think if earnings are stable on those Mag 7 stocks, we see some market cap gains that could be showing some good signs of stability. And I just go back to the index and we go back to like the Wednesday high, April 9th, go back to the Wednesday high. That to me would be a, push back up into resistance, right? That previous Wednesday high would be resistance. We have lots of support here that can become resistance. If the market surprises us to the upside, fine. It's like I'd still want to be hedged till the end of the year, and I look at either a Q4 or a Q1 of 2026 hedge. Just because if there's any shakiness from July onwards, July is when the tariff window is done. Maybe we resolve something. Maybe we don't. Maybe this escalates. The Fed's going to start cutting rates in June. We'll see what yields do. Coming into September, we're going to have employment data that's really going to matter. You're going to have multi-months of inflation data. So, I mean, that window to me, it's like I'm still pretty undecided what July to December looks like. I think right now, I mean, I I know this was a sucky way to start the week, but getting into a dip that has short-term opportunity, like that trade could be totally fine. Just go back up to the Wednesday high. I mean, that's probably a 4 to 5% swing. So from yesterday's low into this Wednesday high, you're talking about a 7.7% move in the index. If anybody's near-term bullish, that could play out, pretty nicely and grab some quick income. I've got swing trades that will benefit from that. So anything that's like swing trades on the QQQ, swing trades on the SPY, those could be pretty helpful. You're obviously going to see some nice P&L fluctuation, hopefully with things repairing. All of my option trades that had like crazy high volatility, and I didn't even start selling a bunch of options until this low and this low. But the IV is still like I need time to settle. Like the IV is still quite high. We're still like just under 30 on the VIX. Like it's still a high VIX, all things considered, right? VIX is still at 30.41. Like that would historically be seen as like, oh, the VIX is so high, sell premium. Well, we were at 60. I mean, if and I don't know this, I mean, I'd love to see the VIX settle back in to the teens again. And if that is the case, then yes, expect the markets to find a way to rally. Okay. However, if we have a new low in volatility, and it's like, well, are we going to deal with like higher levels of volatility? Maybe it's a third. I mean, this is insane to think about this, but a 30 to 50 VIX would just like that would be head spinning volatility. That would make every day just like buckle up. So I hope that's not the case. But until this thing like really settles into mid 20s, maybe backfill some of these gaps, or until I start to see the VIX term structure go back into contango here. Let's go VIX term structure. We're still in backwardation. So until this starts to slope this way, then we're not quite in a quote normal environment. So we'd have to see this start sloping upwards. Okay, we did dollar, oil, gold, silver. Let's get some currency pairs running. 52.62, checking my SPX levels. I'd like to see a rejection right off this gap from yesterday, if possible, for my XPX trades this morning. SPY at 524.75. Let me check on that butterfly trade really quickly. Should be showing a little bit of profit. Not a ton. I'm only 20 cents away from my pin price. That's super annoying. I don't want to take a tiny little win. I was hoping I could turn, 35 cents into like 55, 60 cents. All right. I'll keep an eye. I got a chart alarm set on the SPY. So SPY 525 is right there. Gap fill around 526. Okay. Keep an eye on that one. All right. Let's get some currencies. Market breadth really quickly. Oops. Okay. Here's another interesting timing indicator. I've talked about this pretty much this entire year. This is the S&P number of stocks above the 50-day moving average. Yesterday was a pretty broad sell-off. I think 84% of U.S. stocks were in decline yesterday. So is this a good timing indicator? Certainly could be. No guarantees, but I think in the near term, having some bullishness, having the stock market, hold in there. I mean, it, if I were to, I'm thinking like right now, if I did a synthetic long, I just like MES or XSP, if I were to, buy a call and sell a put, it creates a synthetic long, which is my break even's about right here. I have all sorts of profit potential, and yes, I take on some risk. But on XSP, for example, I don't think this is a bad window to expect a bit of a correction. And I think I'm going to take this trade actually. So let me see what would the drawdown be if price is going to fall, be about 1,600 points down. So I'm taking on some risk there. That's going to be roughly my stop off point. So let me see if I get long XSP right now. Let me see what this buying power looks like. So if I go synthetic, I'm going to go out to possibly end of June. Okay, so we're at 526. If I buy a call, sell a put, I'm doing this for a short debit, which is a little bit cheaper. So a 273 debit. Buying power is 10 grand. If I do might be cheaper to do MES. MES out to June. Buy power, I mean, this is way cheaper. I go long futures, only requires about $200 buying power. But for every, if I'm down 25 points, so 25 points and 5, yeah, that's not bad. I've got some wiggle room there. Okay, I think I'm going to take this trade. So 985. This is dirt cheap to take this trade. A little bit more buying power. What would be I'm out about $200 to take the trade. It's not awful. Let's see. Okay, I'm just thinking out loud. So if I go at the money, out to June, let me check the prices on MES. The highs would be around 5,500. So I've got about 200 points. If we go from here to here, that is around 207 points. So 207 points at a 5 multiple for micro futures, that'd be up about $1,000. So if I did this I can do this on everyone but one account. And then my stop loss would be below Monday's low. That's my stop loss. I mean, my only hesitation is I don't really love this area, just in case it gets noisy. Versus if we revisit the lows, or I obviously had like the low lows, that's probably a better time to get like a synthetic long. But I'm liking today's candle. Things are looking certainly better. Chart going off, SPY crossing 5.5. Check that spread really quickly. I mean, come on, dude. Like 0 DT, I got the thing to pin. This is so annoying. Close. Gross. Can I get... All right, I'm going to try to go after 55 cents here. See if I can get a small win. Still watching SPX. All right. Do I like synthetic long? A little bit, but not a lot. I'll wait. I'm going to wait. If we come back to the lows, fine. Synthetic long to me is way better here. Way better here with much more upside. Obviously, I'm sacrificing a little bit, but this trade would be up about $1,000 for a risk of around, what's the risk there? I mean, it's about a 1-to-1. I've got 200 points of upside, 170 points of risk. It's about a 1-to-1. It's not bad, but I don't love it. I don't need to be super greedy. I want to take the trade, but I think I'm gonna self-talk a little bit longer. All right. Anyway, let's keep going. Sorry. Let's go currencies. Currency strength. Swiss is weaker. A lot of currency stuck at baseline. Uber I saw was getting sued yesterday. AXP I've got trade out to May. Uber's in here somewhere at 74. I mean, price is up, man. I've got ratio spread on Uber looking pretty good. Lyft, I bought some shares down a little bit, but hopefully that'll perform. Aussie CAD. It's going to put in some levels. I'm still riding this thing up to higher levels. If we pull back, the same thing. We have this big move, a little pullback here for a 5.0 or 618 pullback, and then look for a swing trade to like a 127. So if we have a 50% pullback, and then put a swing trade for 127, I think that trade looks pretty good for Aussie CAD. Aussie Swiss. This is just on repeat for the last couple of days. We had a big flush down with all the risk off trading that bottomed out on the 7th to the 9th of April. I'm just going to be watching for a bottoming pattern. So there will be a time for me to start moving all these buy stop levels around, probably moving lower. And I'm going to start putting in another trade here. That's around 5,000. I'll put one more entry there. And if I need to, I will still average in lower, although not really loving just like holding this thing forever. So I'll put one more trade in here to lower my cost basis. If I spot a bullish pattern, then I will take this chunk of buy stops and I'll move them down. And I'm trying to get maybe my break-even point. Like this is a good spot for profit just to be safe, but I'm looking also at a potential 3 to 5 wave move. Whatever that looks like, if I can measure a 3 to 5 wave move, that's going to be my profit target. So my goal is to move my break-evens down as low as possible. This is going to require a lot of patience and hopefully eventually paying out really well. Aussie yen, if we have risk on, I would think that the Aussie yen could form a bottoming pattern, maybe a cup and handle. Aussie New Zealand continuing to head lower. I'm going to start scaling into this one at 106 and probably the 103.50 handle. A couple of levels just to buy in. So I'll wait for this drop into there to buy more, into there to buy more, and potentially around parity, 1.01, 1.00 to buy more. All this is a big range trade. It's falling inefficiently. So even if this falls, it likely snaps back and finds 108 again. This is a great kind of range bound currency pair. It has been this way for years. Aussie dollar, I'm waiting for a pullback. Dollar index, I think the dollar index is oversold. CAD Swiss, same thing as Aussie Swiss, looking to see if the bottoms are starting to form. If so, looking to spot some 3 to 5 wave action, move my buy stops down. CAD yen, Swiss yen, staying out of those. Nice to see the Swiss retreat a little bit. Euro Aussie, two levels to pull back. We go high, low, pull back here to settle back in. If that swings to the downside, that is a risk on environment. Okay. So we either have a pullback that you can sell a swing, look for confirmation on a lower time frame, or a push all the way back up to the recent highs for a rejection, confirm that on a lower time frame, take it back down to range lows. So you've got good structure on your Aussie. We pull back to a 5.0, 618 zone, look for confirmation on a smaller time frame. That could be a nice little swing trade. Euro CAD, overbought conditions with divergence. Not a bad spot. If you're getting in now, you're a little bit early anticipating the move. But if we start breaking a recent low, I think this trade can go right back down to range lows. So another trade where reward to risk is a little bit favorable. This would be your profit versus loss. So I'd say 1.5 to 1, 2 to 1, even if we're waiting for confirmation on that Euro CAD. Euro Swiss looking a little bit better. Same thing on my buy stops. I'll be moving these lower, but I want to spot, some type of pullback, some type of bullish pattern. Maybe it's a cup and handle, and those are tough to spot. I mean, cup and handles are this: market goes straight down, bounces, and then as it causes a pause, that's your cup and handle. So that could be seen as a wave 1, 2, 3, 4, 5. This could just come all the way back to those highs again. If that's the case, I mean, maybe that's a take profit 1. I'd like to hold out a little bit longer and look left on the chart. There's pockets back here, so I'd like to hold out towards like 98, 98.50 for profit. Euro pounds, robot trading that one. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie. If it pulls back, high, low, lower high, lower low. If this hits a 50618 zone, that's a pretty good swing with good reward to risk if you like that trade. Euro dollar, I said moving stop losses and trailing profits. Stop loss below yesterday's candle low is not a bad place. If it goes higher, great. If it doesn't, you had a huge run from this breakout above 105, 106. We've gone up almost 1,200 pips since the lows. It's been a heck of a run. Okay. Pound Aussie, similar to Euro Aussie. Are we going to get a pullback? We had a sharp drop, high, low, lower high. Look for that 50618 zone. Confirm it on a lower time frame. Look for a swing back down. If it doesn't confirm a trade here, meaning like you don't get a bearish confirmation on a smaller time frame, it may drift back up to the highs before it turns. But take your daily structure, look at a 4 or 1 hour chart, and look for confirmation to then align for your entry. So, but I mean, again, typical Fibonacci stuff with a technical obedient pair like this could be a beautiful like 50618 pullback zone and push to like a 127 or 1618. Also, I trade to symmetry a lot. So if it's high, low, lower high, lower low, trade to symmetry. There's still plenty of reward to risk on a trade like that. Okay, pound CAD. I like this trade. I mean, it's not as high as the Euro CAD is, but going back to this area, if it comes up to the highs, it could be a good rejection point for a stop above, and just see if it ranges. Pound Swiss. If you're long pound Swiss, I don't mind this trade. Just be careful on the margin. But long pound Swiss, anything in this structure would be a good target 1. Anything in this pocket area is a good target 2. So you still have about 215 pips, upwards of about 400 pips of profit potential. Is the bottom in? Is this the bottom? I don't know. We could have price going here, pulling back, and then waving, and we still find my pockets, but it might be a 3 to 5 wave move. Price might go up here and then flush back down, divergence, and then we put a bottom in there. But I would be actively looking for a bottoming formation. Pound yen, scalper's dream, or stay out of it. Pound New Zealand. I mean, I'd like to see a pullback. We've already had a pretty big retreat from this high at 2.34. It's already down 1,000 pips. I don't know if I'd really participate in this one. If we come down to this 200 moving average on the daily, maybe a bounce right there. Or if it does pull back, we have some good structure around 2.28. So we pull back to like 2.28, 2.29, look for confirmation there, and then swing it down to the 200 moving average. If they don't offer the swing trade, if I'm waiting here for an entry and it just keeps sliding lower, obviously I'm going to cancel that trade if it's not filled. But not bad setups. Pound dollar, move your stop losses. We have 12 candles, 11 green candles. Today's indecision. But that's a lot of candles as far as the cycle goes that we're probably going to have some type of pause or pullback. New Zealand CAD, longs worked out pretty nicely, scaled in around 8,000 and it's up a few hundred pips. New Zealand Swiss, watching for a bottoming formation. We'll move my buy stops lower. New Zealand yen, I'm going to say no trade on that one. New Zealand dollar, one of the better runs. Aussie dollar did a great job coming back to the same range highs. New Zealand dollar kept ripping higher. Again, move your stop losses. This one's probably due for a brief pullback. A brief pullback could maybe offer up some open space, but I don't know if the dollar has continued to get weaker or not. I'm not sure. But either way, this was a strong support zone around 55, 5,600, and it did a heck of a job ripping up like 300 to 400 pips. Dollar CAD. I was interested to look to see if this area holds for a buy zone. I'm not forcing any trades on dollar CAD right now. I would say if we come back anywhere between 35 to let's say 3,200, that's going to be my next kind of buy zone on the dollar CAD. If I see something in here where it pops back up and we have some type of bullish pattern, then sure, maybe it's a swing trade. Holds the lows, past resistance becomes support. You can find a swing trade in there. That's about it. Okay, dollar Swiss. Hopefully a bottoming pattern sooner than later. This has been, almost an exact replica of the dollar index, which has left pockets and pockets in oversold conditions. We broke some major lows, but question now is, are we going to keep driving lower into like intervention territories like we saw back in 2020 or 2011, 2015? It's like we've had some disruptive Swiss intervention. I think that the Swiss is also going to be moving a lot with correlation in gold. If gold keeps making higher highs, Swiss is probably going to stay resilient. If gold retreats a little bit, then I think the Swiss can do the same. Because Swiss has probably been acting like the best safe haven right now, as has gold. So if gold takes a little breather, then I think the Swiss will lighten up a little bit. Okay, and then these are a bunch of non-US trades. So our Cape Shiller month to month has come down a little bit. Historically, it's still quite high. This is pretty concerning. I think we're trading. I think I shared this yesterday. Like we're at like 19 times earnings for. Yep. So large cap is around 19.1 times earnings, and we've got mid cap and small cap. Beat up pretty badly. You can still see the outperformance of large cap. So I do wonder, and do we still have large cap that has to compress a little bit more to kind of broaden out? Maybe. But if I mean this week and next week with Mag 7 earnings, if they're relatively solid, that could be good. I think the one thing that hurts the market is you could have good earnings, you beat top and bottom, but you have negative or pessimistic guidance. That's the one concern about earnings right now is like everyone's going to say that, hey, I don't know what's going to happen in the next 6 months, or this is what we're doing because there's uncertainty in the next 6 months. I'm going to have to dive into those transcript calls and see like what are some of the common themes that some of these earnings calls are saying. Like last year, the buzzword was AI. Last year was all AI. Is that a Nelly song? Anyway, all right. Question comes in. Do you think Trump knows what he's doing right now? No, I don't. I don't think the etiquette of calling a Fed chair a loser and tweeting on or commenting on his like it's Truth Social where all this crap comes out. So it's like he just has like, does everyone see The Office? Maybe this dates me a little bit, but the show The Office, where Ryan the intern put together a Word document for Creed to just type in his thoughts, and Creed thought it was going out to the internet and sharing to followers. Like that's what Trump should have. Just give him an echo chamber to say all this random crap, but nobody ever hears it. And the markets probably wouldn't be as crazy as they are. So I don't think the etiquette exists. And I don't think there's a plan. I listened to an interesting podcast last night. It's just all about trade war and the reality of what the last 30 years have done. The U.S. has profited in a huge way from globalization. China has profited in a huge way from globalization. China is being the scapegoat. Like the U.S. is blaming China. The reality is we could benefit from globalization, but we're just freezing everything. And I don't know the end game. I think that's what's so weird. Is like this is like the dog that finally eventually catches the car. Like it's just noise. I don't think there's a plan. I think you now see that the talking heads are basically like yes men, and it's just frustrating. Like I've never seen politics so intertwined with the markets, and I think that's what's so frustrating. It's like I've traded for a long time, and politics never, other than the Fed, was never this noisy, and it just creates a lot of chaos. And I mean, look, you can see it literally every day where it's like, what was today? A 1% gap to the upside. What was yesterday? A 1% down to the gap to the downside. What have we seen since Liberation Day? One of the worst sell-offs, one of the 5th worst starts all time in history. And this is what you could argue is event driven, But my concern is that event-driven becomes structural, and structural becomes systemic, and none of that's good. So I think at the end of the day, the U.S. is probably going to be the country that flinches. We talk a hard bargain. We make it seem like we're super intense about these tariffs, but the reality is, if it's going to hurt our economy, we should be smart enough to pivot. And if we're not, then we're stupid for tanking our economy and watching the entire world just say, all right, we'll try to do stuff without the U.S. That can happen. Like, nothing makes the U.S. immune to global trade. Nobody needs us 100%. If there are other countries that are willing to step up and fill our void. So I just think it's crazy to think like that. If we think that the world isn't willing to use other countries and use other free trade agreements and form other alliances just because we're the U.S., it's like we're sorely mistaken. So all this to me is it's crazy, and I've never seen anything like it. I know traders that have traded a lot longer than me that have said the same thing. This is like the second or third weirdest thing they've ever seen, and it's really frustrating. So best thing is, I mean, I brought this up this morning. Like, this isn't a political conversation. I'm a centrist. I'm data driven. I want to trade. That's all the news I read. But it's in the markets every single day, and it is difficult to make those assessments. Okay. So it seems like Swiss yen could have a good long position. I'm not, no, because it's at like 30-year highs. I'm not going to trade the Swiss yen. Plus, I don't want to trade negative swap. If you're long Swiss yen, fine, but you're actually getting negative swap, right? What's the Bank of Japan right now? CB rates, didn't they raise to 0.5? Japan is 0.5%, and the Swiss is 0.25%. You're going to pay negative swap, right? To go long Swiss yen. No thanks. That's my least favorite currency pair right now, Swiss yen. So I took a stab at the swing, made like 500 pips. I'm good with that. I'm foolishly holding against the Swiss right now for swap positions. But I think a lot of this is, eventually I'm going to be where I want to be on gold. I think gold will have a correction. I think the Swiss will be a part of that. If we have some risk appetite, then the Swiss will weaken. This has been a big safe haven trade, more so than the Japanese yen, more so than the dollar. So yeah, the Swiss has been picking up the slack for a safe haven for right now. But dollar Swiss, I mean, I'm looking for technical reasons, which oversold conditions, divergence, higher time frame, 20, 30-year lows. The Swiss has been one of the strongest currency pairs running the last 3, 4, 5 years. So I know I'm early because obviously I've been in trades for 2 years, but I still have 75, 80% of my accounts with margin. I've got plenty of dry powder, and I'm just going to stay really patient, and it's going to suck and it's going to sting, but eventually I think it'll be okay. So, all right. I think that's it for me today. Let me double check the calendar. Yeah, I'm good. So, all right, I'll let you go for today. We'll be back at it mañana. Thanks, everybody. See you. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.